All right, number 14. Pay yourself first. What the heck does that mean, Ron? Pay yourself first. Well, here's what it means. You are the most important expense in your business and at the top of the pile to get paid. The purpose of a business is to make the owners money. There's a lot of side benefits. Oh, I'm putting employees to work. I'm paying some taxes. I'm creating benefits to the public, and on and on and on and on and on. And none of that is a reason to be in business. That's just some benefits. The reason you're in business is to support and make the business owners rich. There's no other reason to be in business. Okay. And if you lose sight of that, then you're not going to like the way your business is working out for you, because what's going to happen is if you don't take the money out and put it in your personal account, then it'll find a home, it'll go somewhere else. So now what happens? Now, when your business is broke, you got no money to lend your business until it ain't broke anymore. If the business is broke and you're broke, then you're done because you're out of cash. You're out of financial gas. So I want you to take all the money you can out of your business, rob it blind, leave enough in there for it to operate on, take all of it out, put it in your personal account, and invest it wisely in your personal account. And your business will find a way to go on. And if it doesn't, you can always loan the money back to the business. And by the way, when you take money out of an LLC, um, if you take it out and you just call it a distribution, um, by the way, it don't make any difference what you call it. If you take money out of your LLC, it's going to be a distribution, and that means you're going to pay taxes on it over in your personal tax return. LLCs don't pay taxes. The gain goes into your personal tax return. Okay. But if you are starting a corporation, I mean, I suggest you don't put more than $1,000 in the corporation when you start it. And in your IRA's case, you have to order that from your third-party administrator, made out to the new entity once you get the name approved by the state. So you're just going to hold a check and take it to the bank and open an account with it. If it goes through your account, it's a distribution from your IRA. All right. All other LLCs, there ain't no sense in trying to borrow money from your LLC, because whether you take the money out of the account or whether you leave the money in the account for the LLC, your taxes are the same, because LLCs don't pay taxes. You pay tax on the gain, regardless of where that money is sitting at the time you do a tax return. So if I have a C corporation, which is totally different than an LLC, a C corporation is don't have anything to do with me. It doesn't show in my tax returns. It's a different tax bracket. In fact, its maximum tax bracket is 21%, where mine might be 37%. But if I take money out of the C, then unless it's a salary, the IRS is going to call it a dividend. And if I take money out as a dividend, that means the corporation does not get to write it off, and yet I get to claim it as taxes. I mean, claim it as income and have to pay taxes on it. That's the term double taxation. However, I can borrow money from my C and call it a loan all day long, and there's no taxes. And now, if I borrow money from my LLC and my LLC pays me back, it's not taxed at all. I can lend money from C to B or vice versa, and there's no taxes on that. It's a loan. So if you put more than $1,000 in any entity, now you can loan your LLC money, but it can't loan you money because it's going to be a distribution. But I loan my LLC money. Now, when that LLC makes money, I can take that money back out, and there's no tax consequences. Probably better do that one again, hadn't I? Because it's pretty important. My LLC loans me money. It's almost certainly going to be called a distribution. I'm going to get taxed. Again, I'm going to get taxed whether they give me the money or not, if it's in the account or not. But in other words, it's probably not going to pass IRS scrutiny to have my LLC loan me money and not pay taxes on the amount that the LLC loaned me. I'm going to pay taxes on that money regardless. Okay. But if I loan money to my LLC, that's not taxable. It's not a write-off for me, and it's not a taxable event for the LLC when they pay my money back. Hello? All right. I hope you got that. Unless you feel like you're getting nowhere. If you don't take money out of the business, I mean, your attitude is going to suck because you don't feel like you're gaining anything. And probably it's because you aren't gaining anything. You're letting the money get spent over here in this company, and you're not providing for yourself and your family enough. I'm telling you, rob your business blind. The only purpose that it's there is to make you money. And if you're going to have an LLC, then have a plan for it making money, or you have no need for the LLC. Any business that don't make you money is probably a business that needs to be fixed or killed, one of the two. The whole purpose is to provide money for you, period. So if that ain't happening, fix it. Ask yourself, what am I doing wrong? Why aren't I making any money in this business? And I can tell you it has nothing to do with the business. It has to do with you and the way you're operating the business. So I can fix it, or I can kill it, or I can just be happy with making a living. So if your business is not making you rich, maybe it's just making you a living, and maybe that's okay. If that's okay with you, that's okay with me, because that's what 99% of your brick and mortar businesses are out there doing. Those businesses aren't making those folks rich. They're just providing them with a living. They decide when they want to show up for work, if they show up for work. But, it's extremely rare for some kind of brick and mortar business to be making the owner rich. I'm not saying it doesn't exist, because it does, but it's rare. Most businesses make very little money or lose money in this country because they're in a position to where they really can't make big money. Like my restaurant, for example, there's so many people I could feed, and the place is full. There's only so many people that I could put out on the patio and feed them drinks while the band is playing out there. And no, that wasn't never full 7 days out of the week. But even if it were, and the restaurant was, full most of the time, even then, I'd be making money. I would be making money, about as much as I might make in a year wholesaling 2 or 3 houses without all that grief. Of course, there are some restaurants that do it very, very well, but I can tell you they're not mom and pop startups. And there's a lot of experience and hard knocks, learning, training going into getting a restaurant to the position to where it's doing well. I'm sure you know some that are doing very well, but if you care to get behind the scenes sometime, you'll find out it ain't as rosy as it looks like it is. You can't figure out how to run a restaurant by eating at it, believe me. If you have to show up for work, your business to succeed, it's running you. You're not running it. You haven't got to the point to where you don't have to be there anymore. So it's sucking your life dry. Real estate investing is one of the fastest businesses I've ever seen to operate. In other words, to get to the point to where you could operate it without the owner, and capable of creating large cash flow and very big wealth quickly, especially when you can do it inside your IRA, your Roth IRA, and do it tax-free, for crying out loud. I think I told you already, but you invest money outside your IRA, invest money the same amount inside your IRA at the same rate over a 10-year period. IRAs worth 10 times more than outside. All legal, as long as you comply with the rules. And plus, there's this thing called a solo 401k that an LLC can have, which is a pension plan for husband and wife, because they're the only ones that can take part in it, and the LLC can't have any other employees. The solo 401k can do what the Roth IRA can, except that it and borrow money from it every year. You cannot do it from your Roth. And before I forget it, there's one big downfall your Roth has now. That is, you probably don't want to buy properties in your Roth that come with debt. For example, if I'm taking a loan subject to, that's debt. If I'm owner financing, that's debt. If I buy a house and get a private loan out of my IRA, that's debt. If I do anything that is debt and I sell the property, I'm going to have to pay capital gains, even though it's in my IRA. Now, granted, everything that's left in my IRA is tax-free forever, but the gain on that property is going to get taxed, and probably even more at a higher trust rate than your own personal income tax rate. So you probably should not do debt-related deals in your Roth, but you can do them in a solo 401k, and coming with debt doesn't matter. Now you don't pay taxes on them. And in addition to that, if I want to put a house in my Roth, and I can buy it with owner financing, but I know I'm going to get hit with taxes when I sell, then I don't buy it. Lease option it. If you lease option it, you can do that in your Roth, perfectly legal. It's not debt, and every dime of it, profit, is tax free. I hope you're getting all of this. I don't know. In fact, I know you're not getting all this, but if you don't hear it the first time, then you won't even know it exists, will you?